Hello and welcome to this edition of Business Morning here on France 24. Let's take a look at today's main business stories in the world's press to start with. The British government's decision to nationalise the troubled bank Northern Rock makes the front page of most UK papers today. The Daily Guardian notes the government's U-turn as Prime Minister Gordon Brown had previously said that a nationalisation, the first of a British company since the 1970s, was the least favourable option. The German model shaken by a massive tax fraud, says the French daily La Tribune today. Some 1,000 wealthy taxpayers are being targeted in the biggest tax evasion crackdown the country has seen in recent years. Deutsche Post chief executive was the first one to be questioned last Friday. The paper says German intelligence services allegedly paid some 4.2 million euros to obtain confidential data from a bank in Liechtenstein. And Toshiba is set to abandon HD DVD format, the Wall Street Journal reports today. The Japanese electronics giant is expected to pull out of the HD DVD business early this week, as it's losing the battle for market dominance to its rival Sony, which uses Blu-ray format. The decision makes Sony's Blu-ray technology the de facto standard for high-definition DVD players in the future. Now, it's the first official nationalisation in Britain since the 1970s. As you've just heard, the government is to take over troubled bank Northern Rock 6 months after it was hit by the global credit crunch. The move is likely to deal a serious blow to the British government's reputation for economic competence.
The big question for many seems to be why it took 5 months to get here. Beleaguered British lender Northern Rock is to be nationalised. It's a short-term measure, according to the Chancellor of the Exchequer.
The government has decided to bring forward legislation to bring Northern Rock into a temporary period of public ownership. Northern Rock will continue operating as a bank on a commercial basis. It will be open for business as usual tomorrow morning and thereafter. Importantly, savers' and depositors' money remains safe and secure.
Northern Rock was hit hard by the subprime mortgage crisis. In September, it asked the UK's central bank for emergency funding, an announcement that triggered a run on the bank and sent shares plummeting. The for sale sign was out for months before any bids came in. Eventually, Richard Branson's Virgin Group came up with an offer. A management buyout was also considered, but both offers were rejected. Neither was able to guarantee that taxpayer loans to the bank would be repaid quickly enough. Through the Bank of England, UK taxpayers are subsidising Northern Rock to the tune of €30 billion. The Chancellor argued that nationalisation was the best option for protecting taxpayers. He said the government would hold on to the bank until market conditions improved. The nationalisation will be pushed through with emergency legislation. Critics have already cast the decision as a major blow to Prime Minister Gordon Brown's credibility in managing the economy.
So, the British government bowing to what it sees as the inevitable and nationalising Northern Rock. Our business editor Douglas Herbert joins me now to discuss it. Doug, Prime Minister Gordon Brown seems already to be taking lots of heat for this decision. Is that fair?
On the face of things, no, Catherine. I mean, Northern Rock did not invent the subprime credit crisis that ultimately brought it down. However, it is the first private bank to be nationalized as a result of that subprime crisis. You know, others are licking their subprime wounds. We've seen a lot of banks do this. Germany's IKB, we last week said, €1 billion bailout from the German government. Big banks, Switzerland, UBS, and the US Citigroup, Merrill Lynch, going to Asian, Middle Eastern investors to help them out to patch up their financial wounds. But the problem here is Brown is in a peculiar situation. I mean, let's look at his CV here. This is the man who was 10 years the Chancellor of the Exchequer, that's the finance minister, under Tony Blair's Labour government. He is the man who prided himself on helping restore Britain's sort of image as a business-friendly place. And London itself burnished its own image as the world's premier financial hub. All of this as a result of the so-called New Labour policies promoted by the duo of Gordon Brown and Tony Blair. Let's take a step back. In the past week, we've seen, Brown talking about a new tax on wealthy foreigners. That's already been a blow to the image. And now you have the whole British press piling on the guy, saying that basically after Northern Rock, it's going to be hard for Mr. Brown, quote, in The Independent today, to boast of Britain's economic success or its superiority as a financial center without someone glimpsing the sharp contours of Northern Rock behind him.
So, fierce words there, but past nationalisations haven't always gone smoothly, though, have they?
Not only gone smoothly, but they hark back to sort of the bygone days of old Labour in the 1970s. Back then, the British economy was faltering, and Labour, as you'll remember, was ultimately driven from power. The government rolled to the rescue of Rolls-Royce in 1971. That didn't go too well. More recently, Railtrack. Anyone who lives in Britain knows the sorry saga of that failed attempt at nationalization. Still ongoing. So basically, it's a sorry record, and we don't know how things are going to pan out, and he has a lot of pressure and not history on his side.
Thank you very much indeed, Douglas Herbert. Now, the battle for Yahoo rages on too. After Rupert Murdoch's News Corp, the internet company AOL is also reported to have approached Yahoo about a possible deal to fend off a takeover by Microsoft. Yahoo has dismissed Microsoft's $44.6 billion offer as undervaluing its brand and its audience. Now it's time for our daily update of business news in Asia with our Beijing correspondent Henry Morton. Today we start with China, which is still struggling to bring inflation under control. Henry.
Yes, China's inflation rate looks set to surge to an 11-year high in January, increasing pressure on the government to do more to rein in prices without derailing the world's fastest-growing major economy. Consumer prices gained 6.5% in December, and analysts expect to see that jump again in January after the worst snowstorms in 50 years caused major delays to the supply of goods across the country. The official figures are released on Tuesday morning. Staying in China, and Sinopec, the supplier of 2/3 of the nation's auto fuels, is selling $4.2 billion in bonds to help fund a cross-country pipeline and ethylene plants. The Beijing-based company will start selling the 6-year term bonds with warrants on February the 20th. The bond issue is the latest by a Chinese firm as the government looks to reduce company reliance on bank loans and provide investors with more alternatives to the nation's stock market. We end in Australia, where thermal coal prices rose to a record for a 4th straight week at Newcastle Port, a benchmark for Asia, as floods cut deliveries in Queensland, adding to supply disruptions in China and South Africa. Power station coal prices gained 11% last week, shooting up to nearly $140 a metric tonne. The price hike continuing the trend from 2007, which saw a 73% increase in prices. Those are then the stories making the business news here in Asia today. Back to you in Paris.
Thanks, Henry. And staying in the region, Asia's 3 largest steelmakers have agreed to raise their iron ore prices by 65%, setting a global benchmark for the raw material. The settlement means iron ore prices will rise for a 6th straight year to a new record as China increases its steel output. Earnings at the 3 biggest exporters, Brazil's Vale and Anglo-Australian mining giants Rio Tinto Group and BHP Billiton, have also gotten a boost. Now, before we close this edition, let's have a quick look at the stock markets. US stock markets ended mixed on Friday in the wake of several bleak economic reports. The Dow Jones lost 0.23% and the Nasdaq 0.46%. And this is where the Nikkei stands in Tokyo right now. And that's it for this edition of Business Morning. Stay tuned to France 24.